For the last 100 days, I have been investing $15 every single day into the S&P 500, the same index known for creating generational wealth over the long term. In this video, I'll show you the results of this strategy and how long it could take to hit 6 or even 7 figures. This simple strategy is not one you'll want to miss. When I started this experiment, I wanted to automate my investing strategy by using something that could snowball into a fortune in the long term. But this sounds way too good to be true, right? Well, when we dive into the numbers, they tell a different story. The S&P 500 index has historically returned 10% per year on average. So by investing just $15 per day, which works out to be $350 per month, I could start this compounding today. So in theory, if I invested just $350 per month for over 30 years, I could have more than $1 million. Now let's say I had even more time, like 40 years until retirement. This compounding could grow even higher to $2.6 million. Alright, now what is my plan on actually doing this? I'm using an ETF that tracks the S&P 500, specifically VOO by Vanguard. There are several ETFs available on the market, and popular ones tracking the S&P 500 are VOO, SPY, or even IVV. Now, when buying into the S&P 500, you're actually purchasing the Standard & Poor's 500 index. This is a basket of stocks tracking the performance of the 500 largest companies listed on stock exchanges in the United States. So simply put, every time I purchase $15 of VOO, that money is being split across over 500 companies in the United States. Okay, but that brings us to our next question. What companies are you really investing in? Since I'm investing into VOO, I can go straight onto the Vanguard website and find all of the companies the fund is currently tracking. So I can see many large names such as Apple, Nvidia, Microsoft, Amazon, and more. These are companies that VOO is tracking the performance of to get returns of the fund. Now, these companies get rebalanced on a quarterly basis, meaning that the percent splits you see here could change over time. But the best part about ETFs is they take care of all of this work for you. Alright, now the final part of my strategy is using my brokerage, which lets me set up automatic recurring purchases. So I set this up for daily purchases, and the account I'm doing this in has been used as an experiment for me to explore this concept a little bit further. I started this back on September 24th, 2024, and we have crossed the 100 days for this experiment at the time of this video. I previously made a video on the first 50 days of this experiment, and during that time, I had a total return of 3.35%, and over the last few months, VOO has been quite volatile, reaching as high as $560 per share, but also lows such as $535 per share. So throughout all of these peaks and valleys, I have been picking up shares with these recurring purchases, and this has brought my total shares up to about 2.79 with an average price of around $543 per share. And VOO is currently trading around $538 per share at the time of this video, which means that I am actually slightly down on the shares. Now, I know what some of you are thinking. What should I actually be expecting with this strategy, and would I have been better off using a lump sum? I was expecting returns of about 8 to 10% per year, which of course is based on the historical performance of the S&P 500 index. Now, there is still plenty of time left in the year for things to play out, so it's hard to say what could happen next, as shown so far in my experiment here. In fact, comparing this to my 50-day check-in video, I had a total return of 3.35%, which we can see now is actually negative. So I have seen these returns actually disappear over the last few months. Now, would I have been better off purchasing these shares in a lump sum? In my specific case, given the timing of this experiment, VOO was trading around $535 when I started this, which means with the current price of $538, I could have been up a little bit on my shares. But depending on when this experiment started, I would have also ran the risk of lump sum purchasing when VOO was at its peak, around $560 per share. Now, I'm not one to time the market, hence why I'm exploring a dollar cost averaging strategy. But the simple concept can give you an idea of the risks no matter which approach I took for this experiment. One objective we did set out at the start of this video is how long this strategy could take to reach 6 or even 7 figures. And using a tool called DripCalc, we can pull most of the historical growth numbers for VU here. So I currently have $1,500 in VU in this account, and my $15 per day works out to be $350 per month. Finally, my time frame is 40 years until retirement, and using DripCalc, this shows that I could hit 6 figures of VU shortly after year 31, and after 40 years it would be 2.6 million. It looks like I would need a lot more time to grow this strategy beyond this amount or increasing the capital to get there. This strategy and the account has mostly been an experiment, so it will continue to be interesting to see how things develop compared to the theoretical expectations. Now, if you are interested in more updates on this investing account, be sure to subscribe to the channel. Who knows if this account will be up or down by the time of my next check-in. Remember, your financial situation may be different to mine, so be sure to pick a strategy that fits your own needs and objectives. Now, if you made it this far in the video, be sure to leave a like, and thanks for watching.